ETF, Exchange Traded Fund, collections of stocks that are bought and sold as a package on an exchange, principally the American Stock Exchange, but also the NYSE, CBOE, and NASDAQ. Evening Star, a bearish reversal pattern that continues an uptrend with a long white body day, followed by a gapped up small body day, then a down close with the close below the midpoint of the first day. Ex-dividend date, the first day of the ex-dividend period. If an investor does not own the stock before the ex-dividend date, they will be ineligible for the dividend payout. The exchange has automatically reduced the price of the stock by the amount of the dividend for all pending transactions that have not been completed by the ex-dividend date. Exhaustion gap, a price gap that occurs at the end of an important trend, signaling that the trend is concluding. Exponential moving average, EMA, a moving average that gives greater weight to more recent data in an attempt to reduce the lag of, or smooth the moving average. Extended, a term describing a stock that has risen past its pivot point. Such a stock is considered a risky investment because it has already begun its advance and is more likely to reverse. Falling wedge, a bullish pattern that begins wide at the top and contracts as prices move lower toward a resistance breakout. Fibonacci numbers. The Fibonacci number sequence is constructed by adding the first two numbers to arrive at the third. The ratio of any number to the next number is 61.8%, which is a popular Fibonacci retracement number. The inverse of 61.8% is 38.2%, also used as a Fibonacci retracement number. It is the ratio of the Fibonacci sequence that is important and valuable, not the actual numbers in the sequence. Flag, a continuation chart pattern that generally lasts less than 3 weeks and resembles a parallelogram that slopes against the prevailing trend. The flag represents a minor pause in a dynamic price trend. Fundamental analysis, a method of market analysis that relies on economic supply and demand information as opposed to focusing on charts and market indicators. Futures. Futures contracts are forward contracts, meaning they represent a pledge to make a certain transaction at a future date. These exchange-traded contracts require the delivery of a commodity, bond, currency, or stock index at a specified price on a specified future date. Gap. Gaps form when opening price movements create a blank spot on the chart. This occurs when the high of the day is below the low of the previous day, or when the low of the day is above the high of the previous day. Gaps are especially significant when accompanied by an increase in volume. Gap. Breakaway. Breakaway gaps signal a potential change in trend and are especially significant when accompanied by an increase in volume. Gap. Continuation. A continuation gap forms in the middle of a move and in the same direction as the current move. These gaps signal a continuation of the preceding trend and can mark good entry points. Gap. Exhaustion. After an extended or long move, a gap in the direction of the current move is called an exhaustion gap. For an exhaustion gap to be considered valid, prices should reverse soon after the gap and close the gap. Gap up-down. An up gap forms when a security opens above the previous period's high, remains above the previous high for the entire period, and closes above it. Up gaps can form on daily, weekly, or monthly charts, and are generally considered bullish. A down gap forms when a security opens below the previous period's low, remains below the previous low for the entire period, and closes below it. Down gaps can form on daily, weekly, or monthly charts, and are generally considered bearish. Golden cross, a signal where the shorter moving average moves above the longer moving average. Usually this term is associated with the 50-day moving average crossing above the 200-day moving average. Golden ratio, also called phi, the golden ratio is 1.6118. The inverse of 1.618 is 618. These ratios can be found throughout nature, architecture, art, and biology. Gravestone doji, a doji line that develops when the doji is at, or very nearly at, the low of the day. Hammer. Hammer candlesticks form when a security moves significantly lower after the open, but rallies to close well above the intraday low. The resulting candlestick looks like a square lollipop with a long stick. If this candlestick forms during an advance, it is called a hanging man. Hanging man. Hanging man candlesticks form when a security moves significantly lower after the open, but rallies to close well above the intraday low. The resulting candlestick looks like a square lollipop with a long stick. If this candlestick forms during a decline, then it is called a hammer. Harami. A 2-day pattern that has a small body day completely contained within the range of the previous body and is the opposite color. Head and shoulders bottom. A bullish reversal pattern marked by 3 or more prominent troughs with a middle trough. The head, that is lower than the other troughs, the shoulders. When the trend line, neckline connecting the peaks at the top of the pattern is broken. The pattern is complete. Head and shoulders top. A bearish reversal pattern marked by 3 or more prominent peaks with a middle peak, the head, that is higher than the other peaks, the shoulders. When the trend line, neckline, connecting the troughs at the bottom of the pattern is broken, the pattern is complete. Horizontal line. Ichimoku cloud. The Ichimoku cloud, also known as Ichimoku Kinko Hyo, is a versatile indicator that defines support and resistance, identifies trend direction, gauges momentum, and provides trading signals. Initial public offering, IPO, the first offering of common stock to the public. Inverted hammer, a one-day bullish reversal pattern. In a downtrend, the open is lower, then it trades higher, but closes near its open, therefore looking like an inverted lollipop. Keltner channels. Similar to Bollinger Bands, Keltner channels form volatility-based bands above and below an exponential moving average of price. Channel direction and price breakouts above or below the channels can be used to identify trend reversals. Limit order, an order to buy or sell a security at a specific price. Unlike a market order, limit orders might not be filled immediately if the market moves away from the specified price.